You know, when we think of super investors, one name usually comes to mind, Warren Buffett. But what if I told you there's another guy, someone who's flown under the radar for decades, who has quietly posted returns that are just as incredible? Today, we're pulling back the curtain on the amazing story of Reece Duca.
And you know where this whole incredible story starts? Not on some fancy Wall Street trading floor. It all began with just $2,000. That's it, $2,000 of his own money. And over the next 50 years, through all the market craziness, the booms, the busts, all of it, that little pile of cash started to do something pretty incredible.
It compounded into billions. Yeah, you heard that right. Billions of dollars. An absolutely mind-blowing transformation that happened almost entirely outside of the public eye.
So that's the question, right? The big one. How on earth did he pull that off? Well, his answer is exactly what we're going to break down right now. Okay, so let's get into his strategy. And I've got to tell you, it goes against pretty much everything you've ever been taught about investing. You know that old saying, don't put all your eggs in one basket? Well, Duca does the exact opposite.
I'm talking a huge amount. Duca would often pour a staggering 70%, sometimes even more, of all his money into just a tiny handful of companies.
And this chart really shows you what that looks like. It's this philosophy of, ultra concentration. While everyone else is spreading their bets all over the place, Duca is going all in on just 3 or 4 businesses that he feels he understands better than literally anyone else on the planet. But here's the really crucial part. He's not just picking good companies. He's hunting for what some academic studies call exceptional companies. We're talking about the tiny, tiny fraction, like less than 4%, that actually generate almost all of the stock market's wealth over the long haul. Everything else, in his mind, is just background noise. So how does he find these rare gems? Well, he came up with this really powerful idea, a mental model he calls Fanatic Reliance. He's looking for businesses whose products or services get so tangled up in their customers' daily lives that they become completely, utterly indispensable. Okay, so that's the theory. It sounds good, right? But what about the proof? How did this whole Fanatic Reliance idea actually play out in the real world? Well, let's look at one of his first massive home runs, the Learning Company. I mean, if you're of a certain age, you'll definitely remember their software. Iconic stuff like Karma San Diego and the Oregon Trail. He took over in the 80s, turned it into a global powerhouse. And the result? 16 straight quarters of record-breaking growth. Just incredible. But maybe the single best example, the perfect proof of his Fanatic Reliance thesis, is one of his biggest modern investments, a company called Appfolio. What they do is they make this all-in-one software that basically runs the entire business for property managers. And see, this software isn't just some tool they use. It becomes the company's central nervous system. It handles everything, from collecting rent and accounting to dealing with maintenance requests. Once a property management company is using Appfolio, trying to switch to something else is almost impossible. It would be like trying to perform open-heart surgery on your own business while it's still running. That is Fanatic Reliance. And his track record is just, wow, it's so broad. He didn't just pick stocks. He co-founded a company called Global English, sold it for $90 million. He was an early investor in private companies you might have heard of. Little startups like Facebook and Airbnb. And in the public markets, he held massive long-term stakes in absolute winners like FedEx and Mercado Libre. So this all begs a really important question, right? How is he able to make these huge long-term bets, bets that last for decades, when most professional money managers are freaking out about the next quarter's results? What was his secret weapon? Well, the secret was the way he set things up. His investment firm, the Investment Group of Santa Barbara, or IGSB for short, was built completely differently from a typical hedge fund. See, they only invested their own money, the partner's money. That meant no nervous outside clients calling them up, no pressure to perform in the short term. Their time horizon wasn't months, it was decades. And they had this simple, brilliant rule: only invest in things that are genuinely fun and interesting. All right, so we've looked at his strategy, we've looked at his incredible investments, and we've seen his unique structure. So what's the big takeaway here? What's the core lesson we can learn from Reece Duca's amazing career? Just look at this. This table lays out his entire 50-year journey. It shows the mind-boggling power of his approach. Starting with that $2,000, growing to $7,000, then $75,000, then millions, and finally into the billions. It is just the perfect picture of how a few highly concentrated, high-conviction bets can compound into an absolute fortune over time. So the key takeaway, the big lesson here, is this. Reece Duca's entire career is this powerful argument against the conventional wisdom of diversification. It teaches us that truly extraordinary, life-changing returns, they don't come from spreading your money thinly across a bunch of different things. They come from gaining deep, almost obsessive knowledge of a few truly great businesses, and then having the courage and the conviction to bet big on them.
And that leaves us with one final and I think really provocative thought. Duca built his fortune using this framework of Fanatic reliance. So in today's world, with technology changing everything so fast, which of the current crop of startups have actually achieved that level of Fanatic reliance with their customers? Because the answer to that question, well, that could be pointing us directly to the next multi-billion-dollar opportunity.